Tuesday, April 8th. One thing's for sure. I got off the air yesterday and I started getting texts from friends. Holy shit, what's happening? One thing's for sure. We're going to go over a lot today, but volatility is remaining in this market. It is going fast and furious. I want to make sure that you know the news is traveling faster than I can put out podcasts, put out posts, do anything. I am not a news source. So make sure you have a trusted news source. Mine is Twitter, with some of the guys on Twitter that I'm on Wolf Spaces with. Some of the folks out there, Shy, Boulor, people that I trust with their guidance of, hey, what's going on in the market? What this actually means, blah, blah, blah. I had a misinformation this morning where it was posted that Besant said that the escalation with China was a mistake. I read it, and I think a lot of people read it as he was criticizing Trump. He's not. He's criticizing China. So just be aware, this market is nuts. And if you want to see the volatility, the VIX, I think it came down to 30. It's now at 40. It's now at 40. Okay? This one came down at 8 a.m. We were down at 40. I think it was 30 or something. But you're seeing it come down. Again, you VIXy, SVIXy, pick your poison. But I'll show you too, here on Seeking Alpha. If you are a member of Seeking Alpha, there is a free webinar. I think it might be even for non-members. Go and sign up for it. Product expert Daniel Snyder takes you through leveraged AI-powered tools to streamline your research, create Seeking Alpha portfolios, manage your Seeking Alpha portfolio views and alerts. I get an email every morning with my portfolio. Use screeners to identify and filter stocks, compare stocks to make better investment decisions. Again, if you want to sign up for Seeking Alpha, you'll see me use it a lot in here. This is the bundle. Okay, the top is Trendspider, but the second one is the bundle. The bundle saves you $159. It gets you premium and alpha picks. Okay, alpha picks portfolio should, and I say should because nothing's guaranteed, but it should outperform any recovery that we have. And I know this because the alpha picks portfolio is so good. We can go over alpha picks and we can go to performance. Look at it. Over time, it's done 105% since inception. The S&P is up 33%. Year to date, it's not doing well. 1 year, it's not doing well. 6 months, it's not doing well. 3 months, again, it looks like it's bad. But because of the way it's picked, it should absolutely outperform. Okay, how they achieve outperformance, they use the quant system. So everything that you're going to get in Seeking Alpha Premium. And if you don't want that, just go and get the premium, because if you get just premium, and that's the third link on Linktree, you get a free 7-day trial and you get $30 off. So go to this Zoom meeting, set it up, go to Seeking, use my Linktree, because then I'm compensated. I mean, come on, put the cookie in there. You know, just like the cookie monster, put the cookie in the jar. You got to put the cookie in your jar for me to get benefit from it. But again, I urge you, because I was a paying customer before I was an affiliate there. And I love this website. I love going to it. It's the first thing that I go to in the morning. So let me start out with the fact that I will not be telling you when to buy and sell. Okay? I will not be the Jim Cramer that predicts Black Monday and then the NASDAQ finished up. Inverse Cramer is back. Inverse Cramer wins. This podcast was started and continues to be the way for me to research for myself. Feel free to ask me about stocks. Don't be shocked if I don't bring them up. But I will not be giving you absolutes, because the market makes you make decisions on your own. That's the market. It's not this podcast. You can't follow somebody into a trade. And if you want something like that, sign up for a texting service. There's plenty of gurus out there that will do it for you. And they will tout that they have been able to, navigate this crazy market. There are plenty of gurus out there who will tell you, and they will charge you a bunch. There is no charge for this podcast. There is no charge for anything that I say. Yes, I have a paid newsletter, but I haven't been charging for this stuff. And it's because in this market, I want to provide you some information. Okay? Like inverse always wins. When Jim Cramer says the market's going to be down, the douchebag got on last night and said, I told members. He's charging his members for his advice. Meanwhile, he's on TV screaming the market's going to go down. It's not me. Not me. I'll be screaming that the markets are going to down. I actually back it up with my trades, but I don't share those with you. So I won't let you go into something or get out of something just because I do. Just understand, that's not what you're listening here for. You're listening for, hey, how do I evaluate stocks? How do I look at the market? What do I think is going to happen and why? Okay, I don't give you a lot of quote unquote opinions, but the entire view on the market is an opinion. So what does the lesson that we learned yesterday? At 10:15, U.S. stocks won $7 trillion in 30 minutes on a fake tariff deal headline. Yes, we learned that the market wants these things gone. While the move was undone, we obtained key information. Here's what we got. Beginning with some background, at 10:15, it was reported that Trump considered a 90-day pause. It didn't. The S&P swung 400 points. That doesn't swing 400 points. Then the S&P, when it found out it was fake, swung 500. It erased 300 points, went down. Minutes later, President Trump's perhaps the biggest name news of the day. He's imposing another 50% tariff on China. Sum this all up, we have a comfortable of no tariff delay and also higher tariffs on China. So again, you found support levels. Today, investors displayed how eager capital is to rotate back into the market. Do not get out of this market. Okay, we probably have further down to go. Tomorrow is when these tariffs really kick in. Okay, Kobeshi, we've identified these levels for our premium members in advance. Before the open, we called a green reversal back to 5,000 while we were blah, blah, blah. Just if you want stuff like that, sign up for it. I'm not going to give it to you. Okay, but if you look at QQQ, I have told you, I think 404, where does that come from? That comes from the 2021 high. And so far, because this week's candle, it went to 402. And where are you trading right now? 433. So I think until we get some type of deal, I think this is the range. Okay, I think that's the range. And again, that is the range in 2021 when you started hiking rates. It was clear that that was where the first level of support was going to be. And today we got that level of, or yesterday we got that level of support. So you can read things like that, be fine with it. 4,800 is where the S&P was. So if we go and look at SPY, because remember, SPY does the S&P exactly, just add 10 points. 4,800 is where the S&P was before the bear market of 2022. So let's just go and look at a weekly. Okay? Look at this one. That's 466. Where'd the market get to yesterday? It got to low of 481. So if you just look at this and say 480, I mean, I haven't put the line here. If you just look at this in December 21, where'd we get to yesterday? I'm going to remove this one. Where'd we get to yesterday? Right back to the 2021 highs. It's as simple as that. Do I expect us to go lower? Yes. And why do I expect us to go lower on this? Take it for this instance, okay? I think the market is pricing in about $280 of earnings in the S&P. Okay, the market, if you just take multiples and you say, okay, the market, if the S&P wants to trade, say at 4,800, but it's making 280, what's the multiple of that? Just divide it. let's see. What's 4,800 divided by 280? That's a 17 multiple. And that's fine. So that's a 17 multiple. In a recession, the market wants the multiple to be 15. And if that earnings come down, let's just say, what's 15 times 235?
The answer is 3,525.
That would mean that that SPY would be down to 350. So earnings season is going to be important. I mean, that's as simple as it gets. That's super, super simple. Now, am I worried about being 40% cash? No, because 60% of my freaking portfolio is in the market. But you could be looking at lower. I don't think you need to rush in. I don't think you need to rush out. I think you need to be patient. We don't know where this market is going. Long term, on this weekly chart, it's oversold. So is this just an oversold bounce? We don't know where the market's going. Some stocks I sold, like NVDA, I sold for a profit. I'm perfectly happy with that. Broadcom, I sold for a profit. They announced a buyback yesterday. You know who's buying the stock that I just sold? It's Broadcom themselves. I may have to buy higher. But the White House is still effing up communications. There's messaging out there. They're still messaging that not too many people own stocks. The people that really don't pay attention. And then if you're pricing in a recession too high, you've got downside. Again, if you're pricing things in, Trump says he won't pause U.S. tariffs, but willing to negotiate trade deals. And you're hearing it, that negotiations are going to continue. And the market likes that. Okay, full disclosure. I did nothing yesterday. I talked to a supplier of eyeglasses because my girlfriend's son, major online influencer, and we're looking at getting into designing the glasses that he wears. I cleaned my neighbor's gutters. And then I took the dogs to get their nails clipped. I then went on Spaces with a few thousand people, and I gave them the advice that I gave you yesterday about paying yourself commission. And boy, did people love that one. I got tons of messages in my DMs. My DMs are open on Twitter, but I got tons of messages. Thank you. Thank you. That's a great advice because what I said, and I'll point it out again, it's in yesterday's newsletter. If you are somebody who the numbers don't lie, if you trade, the more you trade, the less returns you're going to get in long term. It's just numbers. It's not absolute. Doesn't mean anything. But if you decide that you want to trade in a market like this, I urge you, pay yourself a commission. I grew up paying commissions on my trades. I still don't think of trades as free. Okay? I still think of commissions. I still think that if the muscle is there, that you're just willing to press buy on something, pay yourself a commission. And the way you pay yourself a commission is you buy VOO and you don't touch that for 20 years. You don't touch it. It's a commission that you pay. And 20 years from now, that commission is going to pay off. But the other thing that it does is it puts in your mind, is this really worth $50 that I'm never going to be able to spend again? The good news is it comes back to you. The bad news is, again, it's going to set you up for A+ setups. You're not going to take risky trades. Okay? Because yesterday was an absolute mess. If you haven't seen this clip from South Park, it's a fantastic clip. Okay? We can put that in a checking market, mutual fund, blah, 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 that will reinvest it in foreign currency. We'll put this into compounding interest, blah, 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 and it's gone. That was yesterday. That was yesterday's market. And this is one of the greatest clips. I'll include it in the newsletter. I love it. Wall Street whipsaws after erroneous report on tariff pause. It was nuts. You're seeing COVID-style trading. If you were trading during COVID, the move in the S&P tells me that people are defensive, but can turn offensive very quickly. Money wants to come back in. If you weren't trading during COVID, these were days. Remember in COVID, you had just sickness. So the number of cases was the morning news. And it was literally morning news state by state. If in the morning the number of cases was down, the market ripped. If in the morning the number of cases was up, the market tanked. And it was great. For volatility, it was fantastic. That's the style of trading that you're seeing this week. So if you can't take it, sit it out. I got 40% sitting in there. I didn't do a damn thing yesterday. Today, we're way up. Am I losing? Maybe. The Dow and the S&P ended lower yesterday while NASDAQ edged up. The NASDAQ won yesterday. Crazy. And in pre-market, you're way up. The Dow futures up 2.81, S&P up 2.31%, NASDAQ is up 2.2%. Okay, it is COVID style trading. So you're going to have to either be used to it, you're going to have to learn how to do it. But again, if you find that you're losing money, the best bet is pay yourself a commission for every trade that you take. You should absolutely be buying for the time frame, like I said yesterday. Okay, BlackRock Sphinx sees buying opportunity during market sell-off. He also said he thinks that we're going through a recession or that we're in a recession. So buy for the time frame. Yesterday, I pointed it out to you exactly. Okay, I pointed it out to you that if you're in 20s and 30s, you should be buying. 40s, maybe a little bit more conservative. And 50s, I'm being a lot more conservative than I traditionally have. Okay? Sonali Basak, clearly the amount of anxiety in the markets is real, but there's also a ton of fear, FUD out there that's being spurred by information that is blatantly false or misleading. Be careful. And that's the best thing that I can tell you. Be careful. And that's what Leon Cooperman said yesterday. But is this administration winning? We're going to go over to Seeking Alpha, and I'm going to go to market data right here. Okay? And we're going to go to key market data. Look at the year to date. Look at all of this red of U.S. equity sectors. There are very few. Consumer staples, utilities is still up 12% over 1 year. Communications services is up 5%. Energy is down 20%. Technology is down 11%. Again, you don't have a lot of green. And then you go over to the world and you type in, you just sort by year to date. There's quite a few countries that are positive. Poland is the number one, 17%. Colombia, 12%. And you can buy these ETFs. You can buy them. So understand what these are telling you. It's telling you that the U.S. market is weak. It's telling you that potentially the U.S. market could come back. So I want you to make sure that you are still invested. Okay, if you have a 60-40 portfolio in bonds, you very likely are even this year. So understand that my portfolio is mine. Your portfolio should be yours. If you don't understand bonds, get yourself a financial advisor because it might be safer for you. Okay, this is a great Instagram post. If you think that this is just cut and dry, that the U.S. doesn't have any bargaining power, you're wrong. Trump does have bargaining power. He's not doing this just, my problem is not with the actual issue. My issue is not with the fight. It's the implementation, it's the gambling, and it's the messaging that's causing undue harm to relationships with allies and financial markets. That's my problem. It's not the actual situation. It could have been done significantly better. You yell at if you are a MAGA person, you're screaming at Biden for the withdrawal from Afghanistan when Trump didn't have the balls to do it because he just kicked the can down the road. And now you're saying, well, this needed to be done. Biden didn't have the balls. Well, Trump has the balls to do it. He's just doing it badly. Same thing as the Afghanistan withdrawal. And again, the messaging, it's out there. Gene Munster brought up yesterday, and I will, this little tidbit. This is great. She and Trump's birthday are June 14th and 15th. Gene Munster pointed out, maybe we're going to have a love fest around the birthday because that's how long it's going to take to negotiate this crap. Okay? Besson came out and says China's escalation was a big mistake and warns the country is playing a losing hand. They are going to implement these tariffs. Trump is going to do that. And that is tomorrow. Okay? And we've got Tom Lee out there apologizing like Jim Cramer. Tom Lee went on his own thing and basically cried like Jim Cramer. We made a mistake. The resulting market fury is not due to a reaction to a trade war, but rather, in our view, the fact that the White House broke a core covenant of capitalism, stable and predictable regulatory environment. And he basically cried. Yeah. And to the douche who commented, okay? To the douche who commented, oh, let me just, before I go on my rant about the EU. Trump says the EU can buy $350 billion of U.S. energy to get tariff relief. I agree with this. I agree with Trump. Remember, in Trump's first term, he offered Merkel U.S. natural gas. But Merkel decided to go with Russia with Nord Stream 2. Okay? That made Trump angry. I don't get why Germany wanted to go with Russia instead of the U.S. There are things at play that I just don't understand. Okay? But it's clear Merkel hated Trump and didn't trust Trump. Do you think Europe trusts Trump right now with the messaging and the way this was implemented? And do they want to buy energy and be beholden to Trump instead of, Russia? Yeah, they're at war with Russia, but they've got the pipeline coming in. Which one would they rather be at? They've lived with it. So to the douche who said my show should be on MSNBC because I got too political yesterday, I'm assuming your MAGA hat was left on January 6th at the Capitol. I don't care if you listen. I don't care. The other thing is, leaving a message that you're not listening is the most Karen thing to do. Why not just leave? Just leave. Don't listen. Nobody cares. Enjoy your miserable life hating 50% of the people in this country. Okay? I don't hate anyone based on their political views. Commenting before leaving means that you think you're way more important than you actually are. Just leave. Just leave. And if you don't care, if you care about my political views and you're going to tune off because of my political views, I try and keep it as fact-based as possible. But yes, bias creeps in. It always does. If you're telling me that bias doesn't creep into Fox News, you're out of your mind. If you're telling me that bias doesn't creep into CNN or MSNBC, you're out of your mind. It does. It does. So, good riddance to you. I don't care. Honestly, there's plenty of people that listen. It's fine. So there's my rant. Apollo says the Magnificent Seven faces greater risk from global slowdown. It's true. I mean, that's the problem. The problem with my portfolio is going to be it's risky. And Mag 7, and that's going to be for the core portfolio. Again, I'm large cap tech. I hyper focused in my portfolio on the Mag 7. So just understand. Just understand that. Apollo 7 says it's going to be done. But Morgan Stanley lists attractive small cap buys with positive return on equity and momentum. And then Seeking Alpha went in there and said, oh, with the quant rating, we're going to give you some of these. Brinker, EAT, Morgan Stanley rating, equal weight. It's a good one. That is a top stock of 2025. Stride, LRN. Morgan Stanley rating, equal weight. It's not sell. That's a top 2025 stock. Jackson Financial. This is a former top yearly stock. Hims and Hers. I talked about Hims. If they can get their marketing right, this is a good one. So there's plenty of stocks that are still good. Plenty of stocks that are still good. Cathie Woods is buying NVIDIA. I mean, let's look at the chart of NVIDIA. Because you're at 102 right now. This is trading like a meme stock. I trust my 4-hour algorithm. It doesn't have a buy. It may get a buy in the next few days. I'm fine waiting because look at the trend. Okay, where is the trend? Just take a trend line. You're going to take a trend line and you're going to anchor it at a top point and you're going to put a point down here to the bottom or wherever 3. Could you see a bounce up? Absolutely, you could see a bounce up. Maybe the 130 is your new resistance point. Where does that 130 come in? Well, it's right around here. The 140 is the weekly. That's the resistance. When you go to daily and weekly, where's it come? That 130 may provide a nice little thing. On the daily, you just had the death cross. I wouldn't be running back into this. She is a bottom feeder. She understands trading. She knows how to manage a portfolio. Am I following her in there? No. I am going to find a strategy that I like, and that strategy is the 4-hour algorithm. It makes you 235% versus 264%. I'm fine playing it that way. But NVIDIA also for me is a buy and hold. I sold some of this at I think about 95, 96. I'm fine. I took profits. Remember, my average purchase price was like $30. So she's doing it. Now, Broadcom, one that I sold yesterday, had a buyback, $10 billion. I may be buying this one back. So let's look at a couple of stocks. One that I found yesterday. I went over to Seeking Alpha and I said the top stocks. Let me look at the top stocks. And I researched the top stocks. And I said, you know what? One that I found, Exelon Corporation. Okay. Does that look like it's year to date? Let's see. Year to date, it's up 18%. Exelon Corporation, again, it is up 18% year to date. And that includes a pullback from 48 to 44. The valuation, not stretched. Growth, not that great. Revenue growth year over year, it is fantastic, 5%. It's the rest of this where it gets a little, the CapEx growth year over year, down 4%. Profitability, fan-freaking-tastic. Okay? They're getting tons of cash from operation. It's a utility. Momentum, A+. 3-month performance, 19%. 6-month, it's there. Let's see when it went to a strong buy. Where did it go to a strong buy? It got a strong buy here, 221. Okay, at $43. You're back there. You're back to buying it when it went to a strong buy. Has anything changed in the ratings since then? No. Well, listen, valuation went from a B- to a C+. Maybe it's getting a little bit more expensive, but the reality is Wall Street says that it's a $45 stock. Could it pump back up? Yes. The other thing that you want to know is that this one pays a 3.58% dividend. So let's go over and look at it in the 4-hour algorithm, because does this perform? Yes. You make 13% versus 8.7% over the last 2 years. Now you just had the golden cross here. If we look at the daily, you had the golden, it didn't even death cross. It just bounced off there. So could you go higher? Well, let's look at a weekly. The all-time high is 50. 50 up there. MACD's not that stretch. It is overbought. But again, this is how you find stocks. The other one, Amazon. I'm going to give you some stocks here. Amazon was up 2% yesterday. It's up 4%. It's at 183. I've told you this, under 200, get Amazon. I don't care if it continues to go down. This is a great opportunity to get in here. If Amazon goes down to 140, you're still holding at 170. I have not sold Amazon. I am looking at getting more Amazon. Let's see the 4-hour algorithm. Doesn't have you in. The trend is down. Be patient if you're looking at this one for short term, but long term, there is no reason not to get into this one. And again, like I said, Broadcom is buying back $10 billion of stock. Okay? This one is up 5% in pre-market, 6.39%. Has it turned around? I don't think so, but I would tell you from a long-term standpoint, I sold right there. I'm going to look at getting back into this. I took profits. I didn't trust the economy. Was it bad? It's never bad to take profits. It was all long term. I sold out. I think there's some short term back here as well. But I wound up making a profit. Okay, I think that's one. Now, I want to show you, there is still some craziness in this market because this one, JNVR, this was up 842% yesterday. This is a, let's see, I think it's a crypto company. It provisions commercial property financing operations. It's not even crypto. It operates online platform that connects commercial mortgage borrowers, including owners, operators, blah, 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 blah. 800% yesterday. 842. It's down 18% today. There's no quant coverage in this one. It is a market cap of $53 million. If we look at this one, did you have time to trade this one? You absolutely did. JNVR. Let's just go over here and let's look at a 5-minute chart and let's see if you could have traded this with confirmation. 4-hour algorithm, it got you in just now at $25. Do you want to get into that one? Probably not. But you could have bought this at $13. At $13 yesterday. You could have bought it. You know, at right here, you had total confirmation at $17. And you didn't lose that confirmation until $30. You could have doubled your money. So there is still opportunity out there with craziness and trading. I've brought up, United Healthcare many times. Buy it under 500. We'll go look at that chart. Health insurers rally after CMS increases payment to Medicare Advantage plans. These went crazy. CVS is up 10% pre-market. Humana up 15%. Clover Health up 7%. And the one that's in the core portfolio, United Healthcare, this one's up 8%. Now, I've said it before, and I've got these UNH. I've got these marked right here. If you trade between 500 and 550, 450 and 550, sorry. The algorithm got you in at 474. I said there's going to be a gap cover right here, and it did to 500. Now you're 520, 540, 568, 568. Am I buying or am I selling? I'm selling out of this one. Okay, I do think that it gets back to 600, but it's not worth the risk. Not in this market. It's a pop. I'd sell this one. I think it's a good one, but there's opportunities in this market. Okay, Dollar General. Did someone say that there's a recession coming? Because while the market unwinds, Dollar General finds a falling wedge breakout. Okay? Maybe Dollar General with, the recession coming, maybe that's one that you want to take a check. It's not one that I would ever invest in. But Dollar Tree, a dark horse winner in the new tariff world. Citi Research. Dollar Tree was up 7%, and Dollar Tree is up 2% in pre-market. So there's opportunities out there. Understand the job market, which is held up through all of this, may be changing. Shopify announced no hiring until proof the job can't be done by AI. Yes, your job is in jeopardy with AI. Absolutely. Your job is in jeopardy with robots. Is it tomorrow? No, but this is the start. And Shopify in pre-market is up 6%. This one is trading at $83. It will be a $120 stock. It's expensive. It is super expensive at 52 times forward earnings. Okay. And the revisions are down. If we go into a recession, this could be one that gets hit really, really hard. Now, if you don't like that one, maybe you go into some of these other ones. I've said Snowflake, you trade between 130, it's trading at 131, right? 136 in pre-market. It will pop to 200. It will. It's software. Okay. One that I think is good is Alibaba. They're going to provide upgraded AI models to oversee users. Alibaba is a good stock, and it's tariff free. Okay. I think 90% of their stuff is in China. It's in country. So they're not even exporting their stuff, but they will export it. The 4-hour algorithm over the last 2 years makes you 51% versus 5% if you bought and held. You've broken down under that 120, but that 120, I think it gets back there. Because look, it's gotten back there once, twice, 3 times, and now 4 times, and it's back under there. Trade it. Find a strategy that works. The 4-hour algorithm, it works. It gets you in 27 times over the last 2 years. Wait until it gets you in. It wins 41% of the time. Your average win is 10%. You can expect volatility on this one. Okay? And if you want to trade China, there are 2 ETFs. YINN, YINN, which is the triple leveraged bull on China, which will come back when the tariffs are taken off and we have an agreement with China. YINN. Hold on one second. Stop. She's crying because she wants her blanket on her. But again, YINN is the bull. It's not doing well. It's crashing. Do not hold these for more than 1 day or so, and you can trade them using a confirmation. The other one, the bear, Yang, the 4-hour algorithm has you in at $35. You're at $63 right now. Okay? There are a ton in the core portfolio that are screaming buys right now. I will tell you, Bank of America, one of my favorite ones to hold under 40 to 35 right now. In pre-market, it's up 4% to 37. All the financials will get deregulated. Trump has promised you there will be deregulation. Buy it under 40. Because when you look at a weekly chart of this one and you go back here, in 2021, this hit 50. It will hit 50 again. Now, will you lose money? You may. You just dipped under this 200-day. Look, during 2023, it dipped under the 200-day in March. It didn't get back there until January 2024. So you may have some time to sit under the 200-day. But I would argue that this one is just oversold. Look at where the RSI is. It's comparable to where it was in October 2023. These are going higher. Your financials are going higher. There are plenty of opportunities in this market. Do not get out of this market. Again, I've made a big deal over the past time that I'm 40% cash. I am 54 years old. Many of the listeners are much younger than I am. You're in your 20s. You're in your 30s. This is an opportunity to rebalance your stuff. Now, just be aware, tech may not be the place that you go. It might be cybersecurity. It might be consumer staples. It might be, even T-Mobile. It might be Chili's with Eat, Brinker International. But find stocks that are good values and get into them, because I do think you have some volatility. And if you want to trade those triple leveraged ETFs on a daily basis, you can do it. Bank of America, just to give you an idea, the 4-hour algorithm, it makes you 44% over the last 2 years. Buy and hold makes you 23%. You almost double trading this one. Okay? You win 50% of the time. So if you want to wait until the 4-hour algorithm gets you back in because you're afraid of more downside, do it. You've got a gap up here to 36.97. You've already covered this one. So, but understand, there are opportunities in this market. You don't want to sit this one out. If you're younger, if you're older, be patient. I put out that strategy in Trendspider. It's the liberation strategy. I'm just going to type in liberation here. Not liberation. And I put this one out on a weekly basis. And what's this going to do? This is going to help me know when to get back in. And I can put this into QQQ. And the 4-hour algorithm makes me 302% over the last 9 years. You win 64% of the time. Okay? I am going to know when to get back in. And this is the liberation strategy. Again, it's a strategy. And it's just another topic, another check mark for me to know when to get back in. So if you have any question, if you want Trendspider, by the way, if you want this liberation strategy and you want to import it, you want my 4-hour algorithm, sign up for a yearly plan of Trendspider. They have 2-week trials. Go and try it out for 2 weeks. For $29, you can try this out for 14 days. Okay, or you can skip and save. You get the Trendspider for $655 for the year. You save 40%. That's an amazing savings. Amazing savings. But again, you have to listen to it. It's one of those things. I trust charts. Okay, I take emotions out of it and I trust charts. And when they tell me to get out, sometimes I get out. It was built around the 4-hour algorithm. But it also tells me when to get back in. And that's the key. I've got strategies. Don't go into this thinking that you can trade your way around with just some dinky ass chart. Okay. But if you don't have the money in your account, don't go out and pay for tools. Go and get, Thinkorswim. Go and get Webull account. Go and set up some alerts. Trendspider and Seeking Alpha both allow you to alert on different things. Trendspider, I can alert on the technicals. Seeking Alpha, I can alert on the fundamentals. And that's what I like. So I don't have to sit there and watch stuff. I got stuff to do all day. But I've got a plan. So I'm being patient. But again, I'm 54 years old. I've got plenty of money. I don't have to go back to work. Losing the amount of money that I lost over the last month has hurt. It has. Shocked me into selling. I don't like to sell. And it may have been panic. But I slept at night. And that's the key. So if you have any questions, hit me up. Everything's on Linktree right here. The Trendspider offer, the bundle offers for Seeking Alpha and Alpha Picks, Seeking Alpha Premium by itself, Alpha Picks by itself, the newsletter. It's free. I thought this thumbnail, by the way, yesterday was fantastic. And I gave you great advice yesterday in your 20s, 30s, 40s, and 50s. Okay? I wasn't political. But the other thing that I gave you was the tip on commissions. And it's all in there. It's all in there. So if you have any questions, hit me up. Newsletter is the best place to get a hold of me. Okay. Take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.